People, hope you had an interesting start to the month. These are this will be a monthly, weekly recap of whereby I'm going to share my setups that I took the previous week, and hopefully you'll learn one or two things from the market. Now, this was let's start at 1st November when the month started. We executed a buy at 1977, sold back into the market at 1983, so that's roughly 60 pips taken during the day. Now the purpose is this video, I want to show you guys how one or two trades can change your trading career. Because let's say for example you make more than 4 or 5 decisions a day, it's going to be, your critical thinking is going to lower the more decisions you make. So if you reduce your financial decision, let's say your critical financial decisions to 1 or 2 trades, in the case of forex market, 1 to 2 trades a day, it's going to change your forex career. I used to execute a lot of trades, but right now I've found consistency executing 1 or 2 trades. Now enough of the talking, let's get back to. So this day I remember I bought into the market and then sold here, and there was a high likelihood, there was news that was supposed to come out later in the day. I knew there was a high probability of prices retracing this move that it had made, so I executed a sell here because of this candlestick. It showed me confirmation, yeah, there might be sellers in the market. And then what happened, so most of the times I don't trade with a stop loss because I'm very confident in what I'm doing. I've been trading gold for the past 1.5 years, whereby I know what candlesticks, how they print, what they mean. So this was an indication that yes, there might be sellers in the market. But let's say for example you had sold the market here, the most ideal place to have your stop loss was 1988, and look what happened, prices retraced and then went back into your favor. Now this day I should have had my targets. I thought I had my target set, but we cannot cry over spilled milk. So the next day I opened my trading account. I can close my trade without, I can close my phone and not look at the charts even though I have a trade, because risk management for me is very key. If you cannot sleep at night because you have a position open, it means you're risking a lot of money in the forex market. But if you can execute a trade and then leave it for like 2 or 3 days, managing it is very important. But if you can have peace of mind the moment you leave the charts, that's a really good idea. That's a really good step in your forex journey. What happened the next day, I closed it in a loss because I knew the market was going to buy, but if I left it, I would. So anyway, you cannot cry over spilled milk. This was 40 pip drawdown, and immediately price, I closed the trade, I executed a buy. Now this buy was executed because we were expecting NFP, non-farm payrolls. For those who don't know non-farm payrolls, it's one of the biggest fundamental releases of employment, earning hours, and jobs created. So the numbers came out negative, and we closed this trade in from 1990 to 2000. That's roughly 100 pips. Now immediately price made that release and it was negative. We were asking ourselves, remember we are dealing with probabilities. Okay, what is the probability that price is going to retrace after the move it has made? And alas, what happened? So we executed the sell here and we closed it at 1991, somewhere around 100 pips. Now this was on Friday. I don't trade Mondays usually. Tuesdays there was a setup, but I didn't take it. Now on Wednesday I was looking at this chart, and I was talking to my guys, and I was telling them there's a possibility that we might see a stronger dollar this week as a result of our analysis. Our analysis is based on a lot of factors, but we were expecting a stronger dollar. Now what happened? On Monday and Tuesday we rallied downwards, so there was a bearish, and we were asking ourselves, what is the probability that this downtrend is going to continue into Wednesday? Now this was a continuation trade whereby we executed anticipating prices to go where? Further downwards. And what happened? We made new lower lows. So we took the trade at 1963, executed the buyback into the market at 1954, roughly another 100 pips. On Thursday we were looking at these markets. and we are asking ourselves, remember in forex you're trying to deal with probabilities. You're asking yourself, okay, Monday, Tuesday, Wednesday have been trending downwards. What is the probability we are going to have a retracement of this move that has been made on Monday, Tuesday and Wednesday? Now I am a price action trader. I basically look at candlesticks and how they form. They tell me what I want to know. I've been looking at candlestick charts for a while now, to a point whereby price action is in my fingertips. Price action is the best indicator for me. It's not smart money, it's price action. Looking at candlesticks, how they print, because within this noise there is a rhythm. And remember, you're trying to decipher the rhythm in the noise. So when the candlesticks start printing out a rhythm, a different tone, you can anticipate it for it to go. The market is alive and it breathes. It pulsates. You can anticipate these movements before they happen. Now look at this entry. I entered this market on this candlestick because I knew this is a fake out, whereby this one candlestick would have trapped people into selling further downwards. But look at us, we bought here in the market, and yes, it took a little bit of time, 8 hours if I'm not wrong, but executed a buy 1947 to 1962. So that's roughly 150 pips, 150 pips if I'm not wrong. And we didn't trade. I don't trade on Fridays, and this is where the market closed on Friday. Now the purpose of this video is to help you psychologically. It's not me about taking trades or something, but I was a trader whereby there was a point I was executing more than 10 trades a day, and it was changing. It was adversely affecting my psychology.